at the
Friday,
market.
it's Thursday, this confusion this time, 31st ki hai, 1st ki hai, I think, markets are celebrating on
because
1st.
of the Amavas dates.
Exactly. But a lot of my family members are celebrating on 31st. My mom says do the puja on 31st, finish it before the evening. So yeah, this time around, because of that Hindu calendar and the impact of the lunar, the entire Hindu calendar, I think 31st is the day when you do puja. First is when markets are observing a holiday. Markets, yes, you're absolutely right, Anisha. You look at the near-term action and you would say that all major indices are down on an average between 7 to about 9% from the recent high. And the market price action in last 2 weeks has been nothing short of quite scary. The markets are reacting to or overreacting to bad news. They're not rewarding good news. It is FI versus DI. Well, that's one part of the story. But more than FI versus DI, it's the HNI investor, it's the leverage trader, it's the average Joe on the street, which in a sense had come to the market without understanding of risk. I think is now really realizing that equity market investing is also full of risk. So last 2 weeks have not been strong. Last 2 weeks have been quite scary, and in the near term, looking at the bent of the numbers, it is very difficult to make a case for a very sharp reversal. So for the market, the mood has changed, the trend has changed, the momentum has reversed. While flows are intact, I guess Indian markets are underperforming for a variety of factors. Some we've discussed, some we've not discussed. But I would like to take a different view. We'll talk about it this week, that there is just so much of bearishness in the market. And that's the time, if you don't shop, you don't benefit from this kind of a periodic correction. So my sense is, while it's easy to understand why markets are down, what is important is that how you approach this selling, which in a sense will be differentiating your return in 2025. So it's time to have a disciplined approach. It's time to have a very methodological approach to this kind of a market, rather than, for those who carried away in a rising tide phenomenon are now feeling scared in this receding tide phenomenon. But you have to balance it. So what will differentiate your portfolio from underperformance to outperformance would be your approach in next 10-15 days, where what you hold on to, what you sell, what you clean out, and what you add in your portfolio will determine your FI or will determine your next Diwali's performance.
Oh yeah, absolutely. Because, truth be told, many were actually waiting for the correction. So the correction's here. I'm sure everyone has their shopping list ready already. Of course, through the day today, we're going to be having the biggest market voices tell you how to actually step into the new Samvat, what exactly to buy and what to expect from the markets. But talking about the week gone by, you've got a weak second quarter earnings performance clearly at your hands. The FII outflows clearly are weighing quite heavy on the Indian equity markets. The benchmarks have clearly managed to extend the losses now for a fourth consecutive week. Nikun just flagged off, so did Anisha, that we've been actually the world underperformers on a month-to-date as well as week-to-date basis. And the FII selling now has actually hit 1 lakh crore rupees in just the month of October so far. This figure in itself is alarming, Nikunj. Although we did quite okay with the FII absence all through past year, all through this year so far, 1 lakh crore rupees in just the month, that kind of pinches in a weak market.
Yeah, you can look back and say that, okay, this number in a sense did not damage the market because of domestic flows. But I would argue back and say that ultimately selling is selling. This could be because of valuations, this entire China rhetoric, money simply moving out of India after the recent bout of outperformance, whatever may be the factor for a market where we thought that post the Fed rate cut, FIs would continue to buy the market, that thesis in a sense is getting challenged. So where do we go from here? Now, there is no way we can put in a template to establish that FIs will stop selling or they will not sell. But periodically, when you've seen this kind of an bout, and this kind of an aggressive selling by foreign institutional investors, every time when you've participated in the fall after some collateral damage, you've been rewarded. So I'm making a case that sooner than later, now you should not play for the weakness, you should play for a technical bounce for the Nifty and for some of the FI dominated stocks and even some of the railway, even for some of the PSU stocks. So this week, until and unless something really goes wrong globally, I think you may see the intensity of selling come down and intensity of the market carnage coming down, because market conditions are already very oversold. There is no point in selling in the panic, we must recognize that even though markets are off 10% from the recent high, the YTD change in the small cap index, in the mid cap index, in the large cap index is still in double digit. So everything needs to be looked into context. One is the real performance from the fall and one is the absolute outperformance. Nobody likes a correction. वो कहने की बात है, everybody was waiting for a correction. When the correction comes, it hits you, it hits your portfolio. So nobody likes the correction. So if everybody was waiting for the correction, why is everybody not buying? So nobody likes the correction. I'll go back to that same point again, that it's not for the first time this market has seen correction. But when these corrections have happened, what has differentiated? It's discipline, it's long-term strategy planning, understanding the momentum, and hunting for value. These are the 4 variable factors in which you approach the market. When the dust will settle down, when the cycle will reverse, you will emerge as a winner. I'll say it again because it's important for us to establish it again. In a rising tide phenomenon, it's very easy to get carried away. And in a receding tide phenomenon, it is very easy to get scared. Markets are about selling the greed and buying the fear. So the greed part is over, now the fear part comes in, and that's the time you need to be a buyer. Imagine if you wanted to buy a car or a house or a merchandise and suddenly you see, okay, 30% free. Would you not take that opportunity? Well, you will grab that opportunity with both your hands. So I think we are reaching there where suddenly everything is looking cheap. Some justified, some not justified, which we'll talk about. Sure. Not everything in this market is great, but yeah. So I'll give you a punchline which I've learned, went to a lot of so-called Diwali parties or the weekend HNI party. That
Did you win the poker game or not?
Never been lucky with cards. They say unlucky in cards, but lucky in life. I like to believe in that phrase. That's what they say. No, so I think I'll tell you what has changed, Aisha. The definition. We were in a bull market, but we are in a bull market and a bear market now. That has changed. Bull market and bear market will coexist now for some time, which is, you could see one stock in one sector could have 2 parallel examples. A stock which is in bull market, a stock which is in a bear market. Now bull market and bear market will coexist. That's the new line which I've learned over the weekend.
Okay, bull market and bear market will coexist, but is that what the best of the experts are also concurring with? Hear out what they have to tell us. Okay, before we get into listening,
It's a Diwali mood check. Okay, so I'll tell you what, it's a graphic which we've put out. I did meet a lot of ultra HNI over a couple of Diwali parties or Tash parties. The sense is that bull and the bear market will coexist. It's not a bear market. You should not expect anything meaningful in the near term, but private banks are certainly looking cheap. FY25 could be the year of financials when they will make a comeback. I think energy transition is the real deal. Within power or power ancillary, I think is really gaining a lot of traction. And one space or 2 pockets where I think in the near term things could really outperform. One is mid-cap IT, where everybody's surprised with the numbers, and second is CDMO. So these are some of the pockets where I think in general you're getting a sense. So the mood at the ultra HNI smart money crowd, at least in Mumbai on D Street, is that this is not a bear market. Don't expect anything spectacular. Keep your expectations low. Get ready for outperformance in financials. Energy transition is the real deal. Within that, power and EV. In the near term, there could be outperformance in mid-cap IT, and some CDMO pharma stocks could also outperform.